Hello everyone, this is Crystal with Slick Trade, and in this presentation I am going to go over the Forex source group, the professor strategy with you all. Now, what we use here is a few different indicators, okay? And I already exited my EA, but it's leaving the little box up, so just ignore that little box. What you're going to see is you're going to see these purple dots and these blue dots, and those are the trend rider. Okay, now if I go to my indicators list, I'm using a combination of three. There is the Hall Moving Average, which is the blue to purple line that kind of follows along price here. The trend rider, which is the dots, the blue and the purple dots, and the automated trend lines, V2, okay? Now those trend lines are not currently showing on this chart. Let's see here. Might not have an actual, boom, boom, boom. I actually just opened these charts. Oh, okay, this one I had open for a bit. So you'll also see these lines here, okay? And what they're doing is they're following price. They're showing you which way price is going, okay? So, those are the only indicators that I use. I use them on the hourly time frame and for pretty much any currency pair, okay? I have not tried this on any indices, but it may work. I do not know. What you're looking for is, we also have an expert advisor, okay, which sends out signals to you. And what I want to go over is, this can, excuse me. Okay, this can also auto trade your account, okay? And that's completely up to you. It is whatever you're most comfortable with, okay? I personally don't let it auto trade my account. And the reason why is because you're missing out on a lot of pips. And I want maximum pip potential, okay? I want to really gain the most that I can out of each trade, because with these trades, they're long term, okay? They could go on for weeks, they could go on for the entire month, they could go on even longer than that, okay, depending on how the market is trending for that specific currency pair. So, what I personally like to do, okay, is when a signal is issued, I like to wait for a retracement back to the Hall Moving Average, okay? Or if it's not even back to it, if it's near it, okay? So, excuse me. In this example here, there is a buy signal sent out, okay? And it was actually released during a news release. This was before we added the avoid news feature, okay? So, as you can see, price did go up, but then it retraced down, right down to that Hall Moving Average. That right there is where I would have entered. Okay, I probably would have entered right when it touched, actually. So it would have gone a little bit against me. But if you wouldn't have exited for your profit here, okay, then this would have gone terribly against you. All right. This is where I would have entered. Okay, as you can see, it went, I don't know, 15 pips, 20 pips, something like that against me. Maybe 50. It doesn't even look like that much. No, it's not even nearly that much. Yeah, it's like 25 pips or so. And then we start going into profit. Come back down, going higher into profit. And higher, and higher, and higher. Now, as you can see, this was issued on December 3rd, this buy signal. Okay? If you would have waited for this retracement down, you would have gained, instead of entering here and then having the trade go against you for a while and possibly even turn around completely, if you just would have waited, look at how much more you would have gained if you would have entered there. And it was still going up. okay? You can gain a decent amount of pips if you're just patient, okay? I don't like to stare at a chart all day. I like to just let my trades kind of just let them go with Forex, okay? Then we had a sell signal. Now that's still a live trade currently, okay? And same thing, okay? It was issued here. It was issued right there, okay? And look at how far it would have gone against you. You see that? Now, if you're using really good risk management, that's absolutely fine, okay? If you don't mind it going against you for a bit, for a couple days, okay, then that's okay. Go ahead and let it do that. But I would personally rather wait until it comes back up to that whole moving average, then enter the sell, or when it comes near it even, maybe on that candle, okay, and only have it go a little against me, and then have it give me the full potential profit, okay? So that's what I like to do. I'll show you another example. Let's see here. GU maybe? I think yeah, drew a couple things there. Now the GU, that one went, let's see, right here on December 3rd, okay, that went into a buy, or gave a buy signal, and it gave it right here. See that? Now if you just would have waited for retracement back down to there, would have only gone so far against you, okay? Because what I do is I always set my stop loss at the previous low. So just think about that. If you would have entered, where's that at? I think it's right about there. Yep. If you would have entered here and then putting a stop loss all the way down here, that's a huge stop loss, okay? I would much rather wait till it comes on down to that whole moving average. And yeah, it still went against you for a bit, for a day. And the next day, went into profit. Okay? Then four days later, look at that. So you can gain so much more if you just wait for that retracement. Just be patient with trading, okay? It's very, very important. Now here we were given a sell. Okay? And it did go into profit right away, but then shot up back to that whole moving average. So look at how much more you would have gained. Maybe not a whole lot, but that's still, I don't know, a good 30 pips or so. If you just wait for that retracement, let it retrace, then enter the sell, okay? It's very, very important to do that. So that's how the professor works. Super simple, really. Very simple concept. You can easily see entries and exits. Base them on support and resistance. And let them go. Let them go for days, you know, and wait for that retracement before entering the trade. So that's about it for that one. I will talk to you guys later.